The subprime mortgage crisis was an economic happening taking place in the United States around the year 2007 and is seen as one of the main causes to the current global financial crisis. As its name suggests, the crisis involved an increase in subprime lending by several mortgage banks such as Countrywide Financial, the #1 mortgage bank at the time. A subprime mortgage is a type of loan that is secured by real property, in this case housing. Unlike a prime mortgage, however, it does not require you to make any down payments nor show any proof of stable income, making them much riskier. Nonetheless, many mortgage banks saw subprime lending as a good business opportunity despite this lack of security, since they could take out a higher interest on these loans and since housing prices had been continuously rising for a very long time. This meant that even if people would not be able to pay back their debts and hence default on their loans, the bank would acquire their house, put it up for sale, and still be able to make a profit. Unsurprisingly, however, more and more people defaulted on their loans, which created a surplus on the housing market, causing prices to plummet. Subprime mortgage lenders started losing money rapidly, simultaneously dragging down banks from which they had borrowed money themselves, which in turn caused a collapse in more or less the entire financial system. The crisis was in full effect. In the wake of this, one could certainly ask how Countrywide and other mortgage banks could have been so irresponsible as to cause an economic disaster of this magnitude. However, after closer examination, it can be stated that individual banks in fact lack the ability to adapt properly as a group in order to avoid an economic crisis such as the one mentioned. To prove this thesis, we will mainly be looking into the group dynamics of Countrywide Financial during and after the crisis. Like any other bank, the formal purpose of Countrywide was undeniably to make money. It may at first seem contradictory with this purpose in mind that a bank would turn to subprime lending, since it is economically much riskier than prime lending. This can, however, be explained rather easily by using the behavior theory of operant conditioning. In short, operant conditioning shows us how human behavior changes in accordance with the consequences of our actions. If a certain type of behavior or action leads to positive consequences, it will occur more often, and if it leads to negative consequences, it will occur less often. This theory can be directly applied to subprime lending. By lending subprime mortgages, the initial consequence for banks was quite simply that they made more money. The lending was reinforced by its positive effects, leading to even more subprime mortgages being lent and even more money being made, all up until the crisis, after which subprime lending accordingly has become substantially less frequent. This leads us to another question. Did banks turn to subprime lending simply ignoring its consequences, or were they in fact entirely unaware of them? This is debatable, but at the end of the day it's actually also rather irrelevant to the issue at hand. The reason for this is that the leadership within these banks has seemingly been very protected from the financial repercussions of the crisis. Former CEO of Countrywide, Angelo Mozilo, today still holds a net worth of $600 million, despite the fact that Countrywide failed miserably and had to be sold to Bank of America in order to avoid bankruptcy. In light of this, it can be argued that subprime lending has proven to actually be quite profitable for those with authority within the mortgage banks, which suggests that subprime lending in retrospect could have been a rational choice for people such as Mr. Mozilo either way. This is because it has made him a great deal of money without him really having faced any serious consequences for it, aside from having gained a rather bad reputation. These are two major psychological reasons for why Countrywide and other banks were unable to avoid this economic crisis, and why they may be just as unable to do so in the future. What we can conclude from this is that banks in fact are in need of some external regulation in order for our financial system to work properly at all times. Considering the structure of our current financial system, it is practically impossible for us to alter the purpose of a bank, but what we can do is change the means by which they fulfill that purpose. For the reasons brought up, it may very well be necessary for a different group with a different purpose, i.e. the government, to at times step in and regulate the financial sector. In our financial system, we rely on banks just as much as they rely on us, and as we have seen, leaving banks to make all economic decisions on their own can have disastrous consequences that affect not only the banks themselves, but anyone with a connection to the global financial market, which is practically everyone living in our globalized world.